One of the big headlines this week is that Warren Buffett sold nearly half of his Apple stake. Now, Warren Buffett has been one of the most vocal investors when it comes to Apple's quality as a business, leadership, and so many more stuff that comes with Apple. It appeared that Apple is one of those forever businesses that Warren just loves to buy and hold forever. So it was a bit of a shock and a bit of a surprise when it was released that Warren actually sold some of his Apple stake. And of course, the company sold off after because there's a lot of people that love to copy Warren's trades. Everybody thinks we're going into a recession now because Warren sold out of Apple, but today I'm going to be explaining why he probably sold it, what he did with the money, and overall do a reevaluation on Apple as a business. I'll share where I'm looking to buy and my current stake in Apple. Quick thank you to my channel members, Jacob, Redwood, and Ritz. Thank you all so much. On to the video.
Hello, I like money.
So over the weekend, it was actually announced that Warren had sold out of his Apple stake through the Berkshire Hathaway disclosure, and it just happened that we were going to World War III, and the next recession was coming as well on Monday. So I think that was obviously part of Apple's huge sell-off and why they kind of led that Black Monday, people are calling it. He sold out of half of his stake in Apple, and it was valued at $84.2 billion. The last time Buffett was actually buying Apple was a few years ago at around $140. Here's a clip of Buffett just a few years ago talking about how strong Apple of a business is, and you would think he'd never sell the company based off this
thing and relate one to another. I mean, that's the nature of markets. So you're always trying to think about A, what's in my circle of competence, and then what makes the most sense that's within that circle. But the important thing is to know where the perimeter of the circle is. I mean, that's way more important than how big the circle is or a whole bunch of other factors. So I think Apple is within my circle of competence. I think it's an incredible business run by a fellow that's one of the great managers of all time, and he was underrated for a while, but now he's being seen for what he really is.
Buffett got a really good price for Apple, and I'm going to discuss that later, but another part of the reason that he sold was a potential tax-saving move, as they expected the U.S. to increase their capital gains tax rate. Another factor that we talked about on my live show, The Cash Flow Kings, live every Saturday, 8 p.m. Eastern, is the potential taint on Warren Buffett's legacy if Apple were to crash. Buffett's undoubtedly the greatest investor of all time right now, but if Apple were to go down a lot or something bad potentially happen with the company, it would absolutely leave a dark cloud over his legacy if he were to go in the next 5 years. Buffett's also been loading up on T-bills as of recently. Apple stake also took up a large portion of the Berkshire portfolio, so I guess there could be concerns from investors that maybe the diversification wasn't there, but I really don't think that was a huge factor in Buffett selling out of the company halfway. Over the last few months, Apple stock has been rising up for the around $180 level and is currently up 318% over the last 5 years. Now look, price is what you pay, value is what you get, and I think that Buffett got into a really attractive price. Another factor I also think that isn't being really discussed right now is how on board Buffett is really with AI. AI doesn't seem like the kind of pot or pan that Warren Buffett, or even Munger if he were still here, really be all invested in. And a big part of Apple's valuation right now is the potential AI growth that they have ahead of them. This is also something that kind of conflicts me as an investor personally, because I don't want to be investing in AI companies. I think Apple's an amazing business regardless of their AI plans, and I think that AI is heavily tied into their valuation, especially at these current prices. To put it simple, Buffett got a really good price and he cashed out. Buffett is not one of those investors that's emotionally attached to stocks. If he sees a good price, he's going to get out. Remember, stocks are just numbers on a piece of paper at the end of the day. It's a great business when you like to invest in it and be a partial owner. It's all great, but it's numbers on paper at the end of the day. Looking at Apple's free cash flow, they currently have a 3-year growth rate of 14.37%, 5-year growth rate of 14.35%, and a 10-year growth rate of 13.9%. That is very quality growth. Now, Apple loves to reward their shareholders through mainly share buybacks, but also they do grow their dividend. It's pretty underwhelming compared to their payout ratio. I'm really curious to see how Apple's AI plans will really tie into the free cash flow growth over the next 5 to 10 years. Is it all talk, or will they actually walk the walk? I'm really curious to see. The most impressive thing with Apple, though, is the buybacks by far. Now, over the last couple of years, they've averaged buying back about 3.5% of shares every single year. And about 5 years ago, when the stock was very undervalued, they even bought back 7% of shares. It's absolutely insane what Apple's done in terms of buybacks, but one could make the argument they're buying back too many shares. It's so much of a lofty valuation. I'm happy that they were buying back at around 160 and 170 when they were trading at lows this year, but if they're buying back shares right now, especially after this crazy price hike that they've had back in the 200s, I don't know if I'm a huge fan of it. I mentioned that the dividend is pretty underwhelming compared to their cash flows. Right now, their growth rate's only about in line with inflation. Over the last couple of years, 4 to 5%, with the payout ratio being around 15% off of EPS and free cash flow. So they have plenty of room to increase the dividend if they want, but they've definitely been preferring buybacks. Overall, Buffett selling Apple does not impact my thesis at all. I think he got a really good price for the company, and he got out at a really attractive time. I respect it, and it's not going to play into my thesis. I'm still holding Apple for a very long time, and I'm going to let that money compound. So let me know in the comment section what you guys are doing with Apple. I appreciate you making it to the video. Smash the like button, subscribe, and do dividend stocks on drugs. Have a good one.